Howdy everybody, Brian here from quantlabs.net. Today I want to talk about random forests. Now this is a lengthy set of blog posts here on my blog, quantlabs.net blog. So where we started earlier today, it's 4:41 my time, AM that is, April 23rd. And where we started was earlier today. I decided, what does statistics say for a crypto trading bot? Looked at some patterns. You can watch that blog, that post. Then I have posted a number of hours ago, looking at what somebody said to look at PCA, principal component analysis, random forest regression. This is all like machine learning kind of techniques. So I made another video, a half-hour video, walking you through each one, each article that I posted. It looks at those pros and cons. So for me, the most logical one was to actually generate a random forest. So it takes a while to modify the code. I'm using scikit-learn, which is one of the easier ones. Here's the article. I posted this in the article I just highlighted. It's called Random Forest in Python on towardsdatascience.com. So I've gone through this in the previous video. I walk you through the steps. I'm not going to go through how this works, but what I had to decide was, what am I going to use as a set of factors as part of the table or data frame that I'm going to use. So what I decided to do is a standard open, high, low, close. Then I started looking at TALib, the technical analysis library. What do I use I know that works? So what I put in there was rate of change, RSI, relative strength indicator. I've also put in EMA 10 and 20 I'm experimenting with. I also decided to go in with Bollinger, both the upper, middle, and lower band. And what else did I use? Probably some other ones that are kind of irrelevant. I'll go through the display, the output of it. And then in here, you have to, like, I'm using minute data because, again, in that previous video, I talked about why I'd go with that. And then from there, with the minute data, I look at 80%, 20% of the entire data set. I'm using Binance, so there's about 1,000 rows that you can play with there. And again, that's minute data. So that's going to roughly, if you mathematically calculate, between, I don't know, 15, 16 hours a day. And usually anything beyond 24 hours, anyways, becomes kind of irrelevant in the world of crypto, at least. That's what I'm finding. And the thing is, I would recommend, there's a lot of experimenting here, but I'm just basing upon what I'm seeing. So there's that and whatnot. And then we get into the data preparation. Of course, I'm using the timestamp, Unix timestamp, so the charting gets really messed up, which I'll show you in a little bit. And then we get into the features of the target. So I'm using a closing price as the target because what else would I have, right? I mean, it's performance. I could use midpoint between open and close. Right now, I'm just kind of experimenting with close, but more professionally, you want to use a midpoint between the open and the close. Again, that's minute data. So I've talked about all the features that we call it. World of trading, there was the buzz about factor modeling. So all the data points that I talked about, those are the same thing as factor. I'm sure there's a lot of other things I could probably throw in there. Um, and then what we do is we train, we simulate, da 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 da. But one of the things that really is important to establish the baseline as well. I have to really look at, I'm doing this properly, but I'll show you what I kind of came across so far. and then you got to train the model. And all the code really has not changed except for the data itself, like the data frame columns. Everything else kind of stays intact. But for now, I just want to show you how I'm attacking it. Again, looking for feedback. If you want to look at this code, I'll have it posted. And then you go through the prediction, and oddly enough, these errors, they mean absolute error. It's very important to kind of understand that. But what you're really doing is the overall accuracy of the prediction. And I'm doing pretty good. I don't know if it's because I'm on a minute level and I'm such a low level. I'm even getting 100% prediction, which is kind of bizarre. And then here's where it gets funky. This is where it gets all screwy. So in here, we're trying to generate these trees. Now, at the end of the day, these don't really matter. I mean, they matter when you want to visually compare things look right, and that's what you want to strive for. But from my perspective, if you've been following me for the last couple of weeks, couple of months, I've not shown a lot of charts, and there's a reason for it for the last, I'll even say, number of years. We'll just leave it 2 years, let's just say. The charting, at the end of the day, does not really matter because the charting is fine to verify things. As I said, when you're building out these things and researching things, it's fine. Once you're comfortable, these charts are really meaningless. What really matters is the accuracy of your predictions. This guy right here. I'll show you more of it as we get to it. So there's that, and this is what I really, really like about random forests. With PCA and regression, they have their advantages. But one thing I really like is when you go through the data sets of each crypto coin, these variables change in importance. But usually, what I'm finding is, and I'll show you what I mean, is when you pass in all the variables you want to add in as factors or features, here you can judge what your model algorithm is really relying on to get that predictability. So for now, again, this is all kind of in a weird way all screwy for me, but I'm gonna have to probably change things around, obviously, and I'll show you as I go. But this is the initial version of this, so I could probably be messing up colossally in a biblical level, I'm sure. But that's why I do these videos, to get people to look at it and go, yeah, you did this wrong, you did that wrong. You need to focus on that. So that's what I kind of do these. And the next step is, again, to get the accuracy of your prediction. So there's the accuracy of the data itself that you're using, the historical data, we'll call it, and the accuracy of that predicted data. So then we get into visualization. And this is where things get really screwy, and I'll show them to you. I can generate this, but for whatever reason, the chart, it's matplotlib. I'll just leave it at that. It's just, you'll see the problem with it. But I can kind of get something with that chart. This chart, no. This is the actual versus predicted value. I'm going to be honest. I'm not going to spend a lot of time trying to figure this out. It is important. But I will have to admit, I will focus on this result here. What I'm going to show you, I think, is messed up pretty good. And then the last thing we have is the last chart, which is the maximum, sorry, your your target value and anything else you want to display on that chart. So we display that here. I can kind of get a chart, but I think it's kind of still useless. So let's get to it. Now, I ran this test 6 weeks ago. Sorry, 6 hours. Let's say 6 hours ago. So if you watch that video that I went over, namely this one here called PCA Random Forest versus Regression with Machine Learning for Crypto Trading on my blog, there's that video here, which hopefully, yeah, it's working. Yeah, it uploaded. So that will hopefully be updated. Anyways, so there's that video that you want to watch. Yeah, right here. So that's all good. And so you want to watch that video, but out of that, here's why I use random forest. So with that in mind, boy, so we got all this data, okay? So let me show you the output of this. So yeah, let me go back to the spreadsheet here. So we have this spreadsheet. In here we have 23 crypto coins that I watch. In here we only have really one crypto coin that's outperforming the rest. And the real simplistic factor, which I kind of verified that works, is the number of positive returns versus the number of negative returns over, in this case, minute data. Excuse me, over 3 hours of data. So you got 3 hours snapshot I'm looking at with minute data, and out of that we got to factor in not a number of rows and all that, and it's a lot, can be a lot less. I could do 4 hours, but between 3 and 4 hours, it's kind of, I should do 3 hours. Let's just leave it at that. Anyway, so the only one that's outperforming right now is, so when you look at this one, number 2, BNB USDT, you'll know here the number of positive is less than the number of negative. So we have more negative returns than positive returns, okay? So in the last video, I forgot to show you this. Should show you this. So in here, I've got all these different charts that I could make available, but again, people aren't going to use these things, so I'm not going to blow my brains out on it. Let me just see what we're looking for here. So what we're looking for is the first one, BNB USDT, and I think it's called stats. Stats 3. Oh, 1 minute. Stats 3. Okay, we'll do that. So what you can see here out of this with BNB, just from a very simplistic point of view, again, this is the data representation distribution of it. I know it doesn't look great, but hey, why not? But we can see here, if you look at, we have more positive returns. So here's your 0. You can quite easily see that we have more negative returns than we do have positive returns in this distribution. So if I was to show now, that is underperforming, okay? So that's not, it has not been profitable for the last 3 hours. But if I look at this one, the Link USDT chart, which is showing some profit, okay, you'll hopefully see here's our 0 right here, and you can see we have a lot, not a lot, but yeah, I'd say quite overwhelming. We have quite a few more positive returns versus negative returns. So there you go. So I've developed the script that does the features of machine learning, or basically doing the random forest. What it will do is it will go in, and let me see here if we've got a sample I can show you. Okay, So what it does is I run it, the script, again using random forest with scikit-learn. Okay, so this is the data frame that it generates, same one you get in the spreadsheet, adds a couple of columns, da 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 da. And then in here, we get our data frame, okay? And then we get the first data here of the training set, all the different variables that I've included as part of that 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 data set with all the different factors, features, whatever you want to call them. So again, this is what I got. Close. Let's see. I did something wrong. Okay, I'll get there eventually. There we go. Okay, so what I've included: close, high, low, and open, the volume. Now, these three here, upper band, middle band, lower band, those are the Bollinger, EMA 10, EMA 20. The other one I've included is NATR. I can't remember what the N is for. I think it's normalized ATR, average true range. RSI, candle. One candle that I like to use right now that I thought was reliable, and I've got a lot of articles on the blog about it, is Marabuzu candles. They don't seem to work as I thought. Like there are a lot of people that would trade Fibonacci, Elliott, and Candlestick. None of them work. I've tried to get the reversal and the pivot, and it could be the wrong time frame, blah, blah, blah. Either way, it's something that I found doesn't seem to work, especially in mean reverting. And then what we continue with is ROCP. And here I've added the timestamp. It's Unix based, and then I convert them into a human readable format of date, year, month, time, minute, second. So that's all included. Now let me go back to here in the article. The variable importance. Okay, we got the baseline. I know it's in here. Okay, okay, we'll get it. What I'm really using random forest is exactly for this, what I'm about to show you. Okay, so we have the decision tree. Again, I talked about that. We can't get the visual working. Okay, right here. This is what I want to show you. Variable importance. So when you look at this, these are all the variables used, the factors, the features, whatever you want to call them. And what it will do is it will factor in the importance to make the model reliable. So obviously 98% of it is relied on the closing price. Right now I'm probably telling myself this is wrong. I should be using this in the factor with the target. But a couple of notes what I will say, running this against other coins, I do see EMA 10 being an important factor. I mean, very low percentage, but the one that comes up can be any of these in the Bollinger, namely most of the time I will see middle band, the EMA. I never see NATR, RSI candle, ROCP. Those you don't see, but you will see the Bollinger and the EMA 10, and I guess it's because it's so more closely related to how the closing price moves on top of these other ones that I'm mentioning here. So again, I'm no expert here. I'm not trying to be. Just trying to show you what I'm seeing. So you can see here there's absolutely 0 degree errors, which is probably not right. So I'm going to have to probably fix that. Obviously, I'll do another blog as I get to it. I mean, geez, leave me alone. It's 5 in the morning now. And then we get into, what do we get into here? Okay, so we have the important factor, and we have some other data. Okay, so again, this accuracy is important. I was just showing you there. This is important. So what we're looking at here is this right here. So we use the mean absolute error just to give leeway, because it is predicting against real data, even though it's historical, based on historical data. So my head's just getting all screwy now because I've done it wrong for sure. But what I figure is what we're doing here with this random forest is we have data. It's moving in a certain way. The idea here is to be able to predict how over another data set will predict that move over the next 20%. So if we're using, let's say, 3 hours of minute data, we're trying to somehow predict how where's the price going to be over the next, let's say, 15 hours, 20% of that, let's say 2 to 3 hours we're predicting out. So doing that, and let's say we did get a 99% accuracy rate, I mean, that's pretty strong, pretty high, highly predictable. But I think it's not going to be realistic. But let's say we got 95, 96%. We have to figure out, okay, if we're able to do this correctly, and it does actually pan out the way we hope it does, we need to then figure out, based upon this accuracy, let's say we choose 96%. And if we know that we can, out of these certain pairs, these coin pairs, and we can predict 96% of the time the next 2-3 hours of price moves, guess what? You're now able to predict the movement of those prices and be able to say, okay, if we're able to predict it, we can then say, okay, well, if this is going to be a low point over this data set that's predicted or forecasted, we can then map out where those points will be, and maybe even the time, roughly the price, and then in the same prediction be able to then say, well, we predict that there will be a top somewhere in that data after it hits some bottom or a trough, and then we got the peak and valley. So you hit a valley point, and then we have the peak, and predict that movement. Then we can predict pricing on that based upon this accuracy. Okay, so if we're able to do that, and again, it helps to have the charts, and I think I'll figure it out somewhere. But if you're able to figure out that threshold of accuracy, then we can maybe predict with a few things going our way. The probability of here that this coin will continue to outperform the rest. Yeah, I mean, you could measure that based upon some kind of ratio. And we also, don't forget, we also have futures data to work with too. So we can verify that, but we can then maybe measure based upon over the next 3 hours that the ratio between the number of positive against the number of negative, and the higher it is, the higher potential it will stay strong over the next 3 hours based upon the prior historical of the prior, let's say, 5 hours. And then if we know that, plus we have the 96% accuracy of the next price moves, chances are we could predict this. Now, is that reality? Probably not, but it's something to work off of, because if we can do that over a bunch of coins that will outperform, and we get it right, then we're on to something for sure. And it doesn't matter if it reverts back to the mean, but as you know, with Binance, we can only long, but with margin trading and futures and taking the same concept we have here, we can apply this hopefully to futures, hopefully apply it to options. But if we stay in the spot market, chances are we're just going to be able to long and long only. But futures, options, we can do margin trading and kind of do a hack version of shorting. So that's where we're at. I just wanted to update you. As I said, if you got any comments or feedback, let me know, because it's important. And then I'll be able to gauge this better. But so far, I've got a much better understanding of how this works. But I do like random forest compared to everything else that I've seen, only for the sheer fact that you are able to measure the importance of these different variables to get a better prediction. I've not seen that with PCA, and I'm not seeing that with regression. What I do like about PCA is that when you have correlated data, which pretty well all coins seem to over the last number of weeks, not perfectly, but kind of closely correlate around the performance of Bitcoin, it gets harder. And PCA may be useful for that, because with PCA, it's taking correlated data and then breaking it up into components and being able to get data that does not correlate. So that would be important if you hit that scenario where you do hit perfect correlation among all coins against Bitcoin. But there are the odd times, not often, but in this case, like here, we do have one coin that will stand out against everything else, because we have 23, 24 coins that are moving in line with Bitcoin, but yet here we have this one coin, Chainlink, that's going against that. So it is uncorrelated in this instance. But I have seen more than enough times where all of them will correlate around Bitcoin. So that's where it stands right now. I just wanted to show this to you. I got to go to sleep. But this was I don't want to say a fun process, but has really put me to that next level where this is my first machine learning concept and a much better understanding of PCA, regression, and random forest. And there's a lot of other ones like LTSM, long-term short memory. And then you can go all crazy with all the ones I post in my Facebook group, and go crazy on TensorFlow, because right now I'm just using scikit-learn. So I'm going to shut up now. If you got feedback, let me know. If you are into this, want to learn more, go to quantlabs.net, get some free books. Could be basic once you start learning this kind of stuff. And also you get it. You can order a DVD as well, and we have those copies now, and we're starting to sell a few on Amazon. So we'll leave it at that. Thanks for watching. Watch me blab at 5 in the morning, doing crazy stuff here. We'll leave it at that. Thanks again for watching. Have yourselves a good day.